Hey everyone, and welcome back to the channel. Today, we're diving into a topic that can completely transform your financial future: investing. So, what exactly is investing? Simply put, it's the process of putting your money to work to earn more money. It's not about getting rich overnight. It's about building wealth steadily over time, beating inflation, and reaching your long-term financial goals, like retirement or buying a home. Think of it as planting a money tree. You start with a small seed, and with time and care, it grows into something much, much bigger. Without investing, your money just sits there, losing value to inflation year after year. By investing, you give it the potential to grow and compound. So, where can you actually put your money? Let's break down 4 of the most common types of investments. First up, we have stocks. When you buy a stock, you're buying a small piece of ownership in a public company, like Apple or Amazon. If the company does well, its value goes up, and so does the value of your stock. If you sell it for more than you paid, that's a profit. Stocks have the potential for very high returns, which is why they're so popular. However, they also come with higher risk. The company's value can also go down, meaning you could lose money. It's a classic high risk, high reward scenario. Investing in individual stocks requires research, but the potential payoff can be significant for those willing to take on the risk. Next, let's talk about bonds. If stocks are the exciting roller coaster of the investing world, bonds are more like a steady, scenic train ride. When you buy a bond, you're essentially lending money to a government or a corporation. In return, they promise to pay you back the full amount, called the principal, on a specific date in the future. Along the way, they also pay you regular interest payments because you know exactly how much you're getting back. Bonds are considered much safer than stocks. The returns are typically lower, but they provide a stable, predictable income stream. They're a fantastic way to balance out the riskier stocks in your portfolio, offering stability when the stock market gets a little turbulent. Our third type is a big one: real estate. This is an investment you can actually touch and feel. Investing in real estate means buying physical property, like a house, an apartment building, or even commercial land. There are 2 main ways to make money here. First, through rental income, where you collect monthly payments from tenants. This can create a steady cash flow. The second way is through appreciation, which is when the property's value increases over time, allowing you to sell it for a profit later on. Real estate can be a powerful wealth building tool, but it's not a passive investment. It often requires a significant amount of capital up front and involves responsibilities like maintenance and managing tenants. It's less liquid than stocks, meaning you can't sell it in an instant, but it offers tangible value. Finally, let's talk about mutual funds. Feeling overwhelmed by the idea of picking individual stocks or bonds, mutual funds might be your perfect solution. A mutual fund is a professionally managed portfolio that pools money from many investors to buy a diverse collection of stocks, bonds, or other assets. When you invest in a mutual fund, you instantly own a small piece of dozens or even hundreds of different investments. This built-in diversification is its biggest advantage. It spreads out your risk, so if one company in the fund performs poorly, it's cushioned by all the others. It's a fantastic way for beginners to get started with a balanced portfolio without having to do all the research themselves. You get diversification and professional management all in one package. So, to recap, we've got stocks for high growth potential, bonds for safety and income, real estate for tangible assets and cash flow, and mutual funds for instant diversification. The best choice for you really depends on your personal financial situation, your goals, and how much risk you're comfortable with. Many successful investors use a combination of all of these. The most important thing is to get started. Do your research, understand your options, and take that first step towards building your wealth. Thanks so much for watching. If you found this video helpful, please give it a thumbs up, and don't forget to subscribe for more content to help you master your money. See you in the next one.